Okay, everyone, if you don't listen to me now, you're literally going to lose your underwear. Now, listen in very, very, very closely. The stock market is going to break down, crash 10% very, very soon. How soon? I cannot tell you. Why? Because I do not time the market. Now, how low exactly? We're going to examine that in a couple of minutes. Stay with me, stay until the rest of the video, until the end, and you'll understand exactly what to do, how to defend your portfolio. You can, of course, for the next following 10 minutes, play Fortnite or whatever, or instead you can invest your time and learn the necessary information and skills not to be like everyone else and be caught with your pants down, all right? So listen in very, very carefully. Now, first of all, I already mentioned this. As you can see on the screen right there, 6,900. As you can see, I already mentioned literally what you can consider 2 months ago, right? I've mentioned how it looks like the stock market will want to retest, to test 6,900 again. In fact, there is a specific technical level, which is 6,904. Of course, the original expectations, those who know, the original expectation was for the market to stall and halt roughly at around 6,666. Geopolitical conditions push the market slightly higher. As you can see, this retest of 6,900 where we are on the SPX right now was predicted literally months in advance. In fact, some of the people are misled to think that the whole technical analysis and what the occurrence is and the price action is, of course, it is directly related to what is going on in terms of the Israel-Iran war to some extent. But in fact, that price action and that very precise behavior was expected, if you watch my videos, months in advance. In fact, my community and I on YouTube as well, spoke about this before Trump was ever elected. So hold on, everyone. Pay attention very, very carefully, right? So you do not be caught with your pants down like everyone else. And pay attention to what we can see on the price action here, right? So first of all, if you guys already seen the videos, we have the blue and the red channel, which is the fast channel. Basically takes less data, thus it is showing us from the event horizon, from the edge. Of course, we have a small amount of data, thus it's showing us the sort of more relevant short range channel that we're moving within. The slow one takes more information, that's why we call it slow, and that's why we can see right here the larger channel forming. In fact, we already seen how the price action can over penetrate right here on the bottom. So unlike the bottom, in fact, on the top of the channel, that standard deviation is not completely an abnormality. So for those who are panicking already and thinking, Greg, that's it, the crash is over, Tom Lee was right, we found the bottom. Not at all. The crash is just getting started. In fact, if you, for example, were a part of my community, you would actually have known that I warned about these sort of things months in advance. Now we're following how it's playing out. Kind of, you can see this image, but if we'll go to my charts on Greg's on my Discord, basically, right, on Greg's charts, kind of that's how I call the channel, you'll recognize that I've posted about this literally months in advance, right? You can pay attention. As you can see, for example, on 6th of April, before any of that price action ever happened, I was already saying how we're going to continue upwards and not break downwards, while everyone else were still very bearish because of just how their sentiment functions. And back then we were still seeing the full-on war, Iran and America and Israel going on as is. And so nobody thought about any talks, of course, pseudo talks. We know all of that is just Trump misleading the IRGC. Everything will continue as is. As you can see, in fact, we identified a crucial support and resistance level that was in place since December 2025, in fact, and came back into play right here again. And in fact, again, the community knew about this. So where are we headed now? So you want to know where we're headed now, so you'll know what to do, right? So let's start off with the 5 minutes, because the 1 minute sort of is not that important. As we can see, the current channel we're moving within, the framework of the channel we're moving within, as well as, by the way, you can notice that now the slow channel appears to be exactly precisely where the fast channel of the 30 minutes was. Basically, now the slow channel of this is the external one, and the internal one is even a further smaller channel. In terms of momentum, realistically what we're seeing another pickup, so it might have the price action. In fact, some people think, oh, Greg, can we have a higher high? No, the market is forming a lower high. And yes, it can be still very, very close, precisely almost right below that original all-time high, which was 7,002.28, if I'm not mistaken. Basically, on the technical side of things, just for you all to understand, the new lower high can be as high as 7,002.27, literally 1 cent below the previous high. Still, on the technical side of things, this is not pattern breaking. Now, I did warn months in advance, in fact, for those who don't know, how we're going to have a similar, not necessarily equal, but parallel-like structure. If you can see both things right here on the screen. In fact, we're going to see them when we're going to expand to the larger time frame. I'll be able to show you both on the screen. I was saying how basically we have here a head and shoulders structure forming. As you can see, the left shoulder, here it is. The head is very, very shallow, and low, of course, did take a long time to form. Very close in terms of how the level, how high it is. Still, it is a head and shoulders. And I was saying how we're going to get a not necessarily completely parallel or equal or identical, but overall parallel sort of behavior. In fact, I was expecting the low to be sort of somewhere in conjunction with the lows of the left shoulder. It doesn't necessarily have to be identical, but probably was within the same similar vicinity. So as you can see now, we transitioned from an uptrend to a sideways price action that was held up for quite a long time, for the sideways channel, of course, with various extremes. And now we're transitioning to that downwards pressure channel, right? As you can see, on the various time frames, including the 45 minutes, we are now squeezing the bejesus out of our bullish momentum, completely running out, forcing us to turn around, have a turnaround in direction. As you can see right above me, you can see a breakdown of how the stochastic RSI works, the stochastic relative strength index, that basically indicates in any particular direction. We have only two, pretty easy to tell in which direction we're moving. When we have a turnaround, if we've been moving upwards, that means we're going to turn around and go downwards, right? That crossover of the forces in overbought territory above the 80 signals how we're now going to see a turnaround of momentum to the back end of the wave. In other words, continuing to form that downwards trend that you can see very clearly on the screen right there. So that will be equal to this, bringing us close to 6,300, giving us a correction of roughly 10% very, very, very shortly. Boys and girls, hold on to your whatevers, right? Because this is going to happen very soon. How soon? I'm not here to tell you to time the market. That's not what we do with technical analysis. Technical analysis aims to identify mathematical structures that are embedded within the cycle that is literally inevitable irregardless of geopolitical events, although those oftentimes seem to coincide and can move the market a little bit. It is almost like crosswinds for a bullet. Yes, they can sway the bullet a little bit to the left, a little bit to the right, up, down, but on the grand scheme of things, the bullet will still hit on the grand scheme of things within the vicinity of the overall target it was going towards, unless the crosswinds are all that strong. But still, those who know the cycle tends to be 100% correct. You just need to know it to know that it is correct. You need to know the forces, how to analyze the momentum, and so on and so on. So the furthermore we expand, the more we realize that we've been squeezing out any leftover or any remnants of our bullish momentum. The only bullish momentum that we see within the system right now is corrective. Why corrective? Because we are below the 50 mark. Below the 50 mark is basically not oversold is below the 20, but basically this is a neutral territory that decides and defines a directionality, which you'll say, well, Greg, that is bullish, right? That is a bullish corrective measure within a grander bearish trend. The very same way we have corrective movements in an uptrend, the very same way we still are moving in an uptrend and we have various shallow corrections, and some may think this is exactly one of those, but realistically speaking, you've got to understand that these shallow corrections happen on an uptrend. This, on the other hand, is now going to start occurring on a downtrend and a reversal of the forces, even on the quarterly chart. In other words, we're looking at many quarters, at least multiple quarters, at least a couple or even 3-4 quarters, that overall going to be a lot more bearish. So that 10% drop is just the first stage in many more stages to come before we'll see the lows of the channel, which can be even lower than what I'm showing on the screen right now, just to give you an idea how low we can go. In fact, the current perception is towards the area of 3,300 on the SPX. Yes, you've heard me correct. 3,300-ish handle. Yes, maybe even lower. Of course, over time, we're not here to time the market. We're here to identify the levels to which the market will end up going overall. And so, yes, you better prepare. And a lot of people will lose a lot of money. A lot. I cannot emphasize how much money that will be. Now, if you don't want to be one of those people, join in the community right now. While it's still discounted, join the academy. You'll know even more. You'll become your own independent analyst. If you won't, you'll continue being surprised and caught with your pants down like people will be in a couple of sessions from now, and will say, oh, how come I didn't know? How come the market didn't send me a personal message? Really? Are you that childish? If you're that childish, and that's what you think when the market starts breaking against you, although you had all your hopes up, and the market doesn't care about your retirement plan. You gotta remember that. And if that's how you are, you have nothing to do in the overall stock market. Trader, investor, don't matter. So traders, investors alike, join in the community. The link is up above, patreon.com/Greg_Re_H. Don't forget to comment below your thoughts about what you saw in this video. If you like what I do, don't forget to smash the like. I tremendously appreciate it. It is 100% free. And yeah, I'll see you on the next one. I'll see you in the community, in the meetings that I do with my community or wherever. I hope you all have a wonderful rest of the week. See ya. Bye-bye.